Out if we're live today. Are we live today on YouTube in the right location? Please, YouTube, work for me. I don't know what happened yesterday, but we are. Yes, thank you. Okay. Good morning, everybody. Welcome to the morning show here on Stock Market TV. Spencer, Steve, no JC. He'll be back on Monday. Actually, programming announcement. This is going to be our last morning show of the week. No show tomorrow. We're all going to be out for different reasons, so we'll be back on Monday with you. But that's neither here nor there. Today, busy show. A lot going on. We got a lot of earnings to talk about. Tesla, Alphabet, Chipotle, to name a few. Jeff Macke will help us out. He'll help us out with the Chipotle report. That'll be at 9 o'clock. Kenny Glick has already had a great morning, apparently, so he'll be on to talk about that. Sean McLaughlin will be on to talk about what he's doing in options land. So we have a lot to do and not a lot of time to do it in. So let's get the show on the road. If you're watching us on YouTube, hit the like. I do appreciate that. I do look, believe it or not, I actually do look at the likes we get for every show. And I always wish there was more. So do your part. Thank you. All right, Steve, you ready? Let's go.
Good morning.
Yep.
So yeah, so Sydney Sweeney, everybody's talking about it. American Eagle Outfitters up 20% on this. It's bigger, in my opinion. All of these old millennial brands, Spencer, are coming back. Maybe the people who grew up with these brands finally have money. I don't know what it is, but there's like a demographical thing going on, in my opinion, why a lot of these old brands are. Ralph Lauren is at new all-time highs.
Yeah. So, it's a good point. Jeff has already written a post about this. I know he has thoughts and we'll ask him about it. But I think for a time, Steve, and correct me if I'm wrong, it felt like there was a movement away from like all the mall retailers. If you were like a retailer in the mall, you were not cool.
Spencer, right? They're eating Krispy Kreme donuts again and wearing American Eagle jeans. That's what's going on out here. And wearing polo hats.
Apparently, I mean, yeah, American Eagle. I used to shop there. I don't anymore, but I used to back in the day. Maybe I need to go back. I don't know. But
and what's the big deal about the Sydney Sweeney?
We'll have to ask Mr. Macke. But they launched a new line of clothing last night, right, or yesterday, and this is, like you said, the stock of the day. It's up almost 20%.
The lips on, yeah.
Jeans, new jeans, apparently. Okay.
We got Google. We got Tesla. I think a good and bad.
Let's do a state of the markets. I want to talk about Google. Google remains honestly probably one of the more interesting earnings situations because of the whole AI thing and what's going on with them. So let's do a state of the markets. We'll talk about Google, and we'll see where that gets us. I see a lot of green on my screen, Mr. Strazza. The only exceptions to that are gold and Russell futures, Dow futures. S&Ps are flat, but everything else on my screen is up. Let's look at my other screen here. Crypto is crypto's not, but
the cryptos I can't add charts to this slide deck for some reason, so I'm sending them straight to you. I want to talk about healthcare. With cryptos, you got to let them dance. They've come a long way in a short while. Something like Solana down big yesterday. That's just how this goes. So yeah, it's down like 10% off its highs. That's how something that moves from 130 to 200 in a couple weeks is going to correct. So you don't you just have to be comfortable with the volatility characteristics of the things that you own. That's what's going on in crypto right now. I think Bitcoin is coiled up and ready to make a move. I think a little bit of short-term tactical rotation, right? A little flow back to Bitcoin. This little bull flag probably resolves higher, maybe as the altcoins are cooling off and digesting some of their, really impressive gains that have occurred over the course of the past few weeks. I think something like that would make sense here. Some of these Bitcoin miners look really good.
Another way of saying what you just said is you do not get the reward without the risk. So yeah, an 8% down day, whatever Solana was down yesterday, 8-9%. That's par for the course. That is to be expected within a broader uptrend, right? So
how did BlackRock do? Oh, futures unchanged here again today. Yeah. We were laughing. Spencer and I were laughing yesterday morning about how it was like, is my charting platform broke? Like nothing's moving. But look at the candles we got by the close. Ended up being a pretty solid session across the board. They keep buying dips. No bearish follow through in this market, regardless of where you look. I think you do want to be patient though right now, or at least pick your spots selectively, because a lot of areas are, I would say, stretched. I think that's fair.
And yet breadth still improving. I saw on Grant's daily number this morning, right? Number of stocks in the S&P 500 trading. I think I have the chart here actually. Trading above their where's the chart? Trading above their 200-day has reached a new high of this cycle. So that's still good news
for people looking to take action right now. It's just a question of do you need or want to run in and buy something that's already overbought, right? Sure, breadth is expanding, everything looks great, more and more groups are working, right? But a lot of groups, at least the ones that have been working, are overbought. So I don't think you're getting great entries in most places right now. And the answer to that question is it depends, right? Some things you could run in and go buy them overbought. Some of these cryptocurrencies, they get overbought and then they just get more overbought.
It's true. What do you want to say about healthcare? Healthcare stuck out to me as well because I every morning I like to look at the ETF power rankings, which if you do not get is a free email we put out. Probably my favorite email that we do. The link is there on the screen. And healthcare was at the bottom of the table this morning and looking pretty red.
Put up my chart, please.
Ouch.
So that is a 4-week rate of change, basically showing you the trailing 1-month performance of large cap healthcare on a relative basis. So XLV relative to the S&P 500. Basically, it's worst 4-week relative performance ever. You got to go all the way back to the financial crisis. The question becomes when you see, a surge in momentum in either direction on a rate of change indicator like this, was that exhaustion the end of an old trend or initiation, the beginning of a new one? In this case, this can't be downside initiation, right? Think about it. One of the largest negative momentum readings in history. This chart's already been down and to the right, falling for several years. The underperformance from healthcare has been, off the charts for a long time. This is not a new trend. It can't be a new trend. I think it can only be the exhaustion or the end of an old downtrend. I think healthcare is about to reassert some leadership. This chart's about to start working up and to the right. So you got to look around. And right now, biotech. Biotech makes so much sense with everything else that's working, right? It's the speculative growth trade or an extension of that, just with a healthcare vibe to it. So throw up the next one. This is XPI and IBB. I think you had a big news for the biotechs yesterday. You got a breakout in the lower panel. Sorry, it's not marked up and it's not one of our normal charts. But in the lower pane, that's IBB breaking out above VWAP, this little coil. That's an upside resolution. So I think new leg higher for the biotechs. This is a group I think you could buy right here, right now.
Wait, what's that? Oh, this is the same chart. What?
And you know what else? No, the one above is XBI.
Oh. I actually thought they look identical. What's the difference?
Yeah, well, that's the point that I'm
Yeah.
making. The large caps are breaking out first. XBI is going to follow. But I think you can look around the whole space. Some of the big boys here. I got one more chart for you. Throw this one up. Some of the big healthcare names. Where's my chart? I got a chart of Merck here. Some of these big healthcare names have been absolutely destroyed. Merck, Pfizer, even something like Bristol Myers. If you look around, Medtronic, carving out a really, really good-looking rounding bottom reversal pattern.
UNH has been taken out back and just continued to get beaten up every week. I look at UNH out of sheer curiosity.
I'm less interested in that one for now.
Yeah, it's been bad.
Something like Zoetis, leader in animal healthcare. That's probably not a massive top. You got something like Gilead, right? If you want to lean into some leadership, Gilead looks great. For the GLP-1 people, as much as I hate to say, it's probably not a top in Lilly, right? So there's stuff to be done in healthcare. What's Pfizer's dividend? Like 7%. I know the stock's been up a good deal over the course of the past few months, but they pay like a 7% dividend. Better than any bond you're going to get, or junk bond even. But own Pfizer. So
yeah, I'm seeing almost 7%. Good call.
Merck probably finally gets this massive base completed, right, and hits some targets on the upside here. We talk about big bases. This is as big as it gets. You got to go back 25 years to those .com bubble highs. So we went, and then we failed. Middle of a bull market. Is this really going to be like a massive failed breakout? One of the largest healthcare companies in the world? I don't think so.
I admit I haven't thought a lot about healthcare other than the fact that it's not playing ball, and I like to keep an eye on UNH, like I said. But I don't. You mentioned Medtronic. It's actually one that I almost bought a couple months ago.
I've been buying it.
You know that actually, I'll tell you when I almost bought it.
I'm buying it.
I almost bought it. When was it? It was like I guess it was like a month ago. Maybe it was like a month and a half ago now. When it was got above that the Liberation Day, pre-Liberation Day high right there. I was strongly considering. I didn't pull the trigger, but should have. But medical devices is one of those spaces where it's like, to me, it's kind of like home builders, where like just structurally, like, are you really going to go wrong in the long run? Probably not, right? Like cybersecurity, medical devices, home builders. There's just like a structural trend there, I think, but I don't have any exposure. So
you got to get in the homies. You're not too late. And I overall just love that you've been getting so much action lately.
Wait, you meaning me? What?
You? Yeah.
Me.
Yeah, you've been getting a lot of action. But the Baba, you're out here. You're buying stuff.
I am.
I've been going shopping.
I'm pretty cyclical in my activity. I tend to do nothing for weeks or months at a time, and then I'll just have a barrage, and in like 2 weeks I'll turn the whole thing, not the whole thing over, obviously, but I'll do a lot of stuff in 2 weeks, right? I'll get really active. That's just kind of maybe that's not the best way to go about portfolio management, but that's kind of how I roll.
Medtronic, I think you could buy right here today. Call it 92. You got a little trend reversal. You get confirmation above those year-to-date highs, like 95. But industry leader, healthcare, perfect base. When I see a textbook primary trend reversal pattern like this, I don't overthink it. I just tend to buy it, especially in a quality, secular leader, long-term leader like Medtronic.
See, I overthink everything. That's my problem. What is this international ETFs table? I mean, I know what it is, but why do we care?
As it turns out, trade wars so bullish. We talk about how wars end up being bullish, right, for the global market, trade wars. Same deal, I guess. Who knew? People were going crazy, losing their goddamn minds in March and April of this year.
I
Months
do
ago.
wonder.
It was the end of the world. So I just want to make an announcement. It wasn't. Everything was just fine. Nothing but green on the screen when you look at anywhere in the world. Where's my globe? Anywhere.
All right.
I don't know where my globe is. But wherever you go, green on the screen, like my shirt. Everything's up. Since Liberation Day,
here's my
since
question.
the April lows.
Here's my question. We are basically 1 week away now from that deadline, right?
Mm-hmm.
That tariff deadline.
Nobody cares.
Well, this is my question. Is that going to mark the end of these uptrends? Because the conflict will end. The conflict is going to end on August 1st magically, and then boom, no more uptrend.
They bought the rumor and sold the news.
Yeah.
I don't know would be my answer for you. But right now, we are just clicking on all cylinders. International equities look fantastic. I'm buying more Brazil today. There's so many different places that you can go for alpha right now. Like grab a globe and just spin it. Pick one. Peru, Italy looks so good.
How much
Vietnam,
of this
have I told you about Vietnam?
Not recently. How much of this is the dollar?
I got to reframe my dong, but shout out Vietnam.
Wait a minute.
Long dong.
That's a lot of dongs.
Long dong. One of the top performing countries.
It always sucks that we have like the least colorful currency. But speaking of currencies, how much of that outperformance there is the dollar or lack thereof?
I'm having such a good morning today. What?
How much of this global strength is the weak dollar?
A lot. Okay. What do you mean? These are dollar-denominated assets. You're selling dollars and getting long another currency. These are short dollar trades.
Right. It was somewhat rhetorical.
Right. No, it's a good question though. Some more than others. Right. Depending on the volatility of the currency, your performance in some of these specific country ETFs is going to be either driven a lot more or a lot less for the less volatile currencies by the Forex component of that. So yeah, definitely something to be aware of. When I see a chart of the Brazilian real and say, ooh, I want to buy that, I don't run to my Interactive Brokers account and buy real futures. I'll be like, okay, EWZ calls, right? More like that. That's how I use these international funds. But you can make bets on the currencies through them, some more than others. We do that a lot. We have a chart book where we overlay so we'll overlay EWZ with a chart of the real, and you just have to look at it right over time, and you know how much currency you're getting.
At what point do you look at any of the ETFs on the screen here and be like, this is cool, but this is just so overextended? Because like a 20% move in Austria, no offense, Austria, right? But like South Africa,
you're not
right?
wrong.
These are not moves that you get every year in these countries. Some of them you do, right? But some of them you don't.
You can. This is a matter of time frame. If you look on a daily or something like that, dude, these have been really tough trends to get into. Because you're right, Spencer. They've just been absolutely. They've ramped, right? Everybody was scared in March and April. There was a great buying opportunity. Then you got an absolute V off of the lows, and it's been tough to like find a spot and even pick a continuation pattern to get into. So over the shorter term, totally, they're all extended. It feels like.
Yeah.
Looks like. If you zoom out on something like you just mentioned, Austria, I wish I had the chart. Fonz is out this morning. If you zoom out on something like that's EWO, MSCI Austria, just broke out of a massive base that dates all the way back to the financial crisis.
16-year base, yeah.
So are you buying Austria for the next 3 years or for the next 3 months is the question are these trends extended? So what are you trying to do with them? I have some of these international funds in my long-term accounts. In my IRA, they're just going to sit there forever. I'll buy a breakout like this. I think
the Austria chart. I have no idea what is in that thing. I have to go look because I have no clue what Austria has going forward. But I assume banks. But
I'm in Sweden. I got the EWD. I like that one. Real slow mover. That's
is Sweden just like half Spotify? Is that what that is?
Yeah. Mm-hmm.
Okay.
Big Spotify.
Cool.
And you get a lot of Krona in there. Krona looks good.
Okay, makes sense.
Brazil's got a lot of beta. Brazil's a fun one. That's why
Yes,
I'm always.
South America is the crazy place, right?
You want, yes. South America is probably the highest beta, even more so than Southeast Asia. But you can get a lot in Southeast Asia too. Look at Vietnam. Just look at the chart of Vietnam. I mean, that's the thing of beauty. It came off almost new all-time lows, and you got this beautiful spring, trap the bears, and it's been surging from 10 to 16 in a matter of months. So if you go to the right places, you can get some real alpha and real beta
Yeah.
in some of these emerging market country ETFs. And Brazil looks great. Dude. You could just go buy something like Vale, Petrobras, talking about the dividend in Pfizer. I like these stocks that are looking really reversally and have sick yields that I feel good with. If I can make an easy determination that something can't be a dividend trap for much longer, then I'm in. I'm buying a stock like Pfizer all day if there's signs that a trend reversal's in. Same with Petrobras. Is it still double-digit yield there? That Valet or Vel, I don't care how you say that. That's another one. Really nice tactical base there. You can buy options in Val. EWZ, EWZS, even better. Small caps have been outperforming. You have speculative tech stocks in a country like Brazil, StoneCo, STNE, PagSeguro, PAGS. XP is another one. New Holdings, big digital growthy bank out there. So a lot of options. BRZU for the crazies.
Yeah. Before we bring on Kenny, can we just talk like earnings for a second? We Tesla and or Alphabet. I don't know if you have a preference where we go, and maybe you want to pull up a chart. We can do some live charting. But Tesla is down. What is it down now? Just only 4% this morning. You would have thought, based on the headlines, that it would be down a lot more than that, but it is at the lows. So Tesla's report was, you know what I always appreciate about Elon Musk is he doesn't mince words when things aren't going great. He doesn't say he doesn't say, well, yeah, it's challenging, but we're working through it, or things are not as bad as they seem. He doesn't say that. He says straight up, yeah, like this sucks right now. It's gonna suck for a couple more quarters, maybe a year, right? He's honest about the sucking part, right? Which I do appreciate. So that was kind of the theme of last night's report, right? So, the EPS and the revenue, they are what they are. The EPS actually came in below estimates. The revenue beat, but whatever. But it's all about year over year and sequential declines, right? So the revenue dropped year over year, the net income dropped year over year, the deliveries dropped quarter over quarter. They're talking about the solar credit or lack thereof. And so there's a lot of just numbers going down and to the right on the call last night, and that's kind of the reaction here this morning. But it's as JC would say, let him dance. It's early yet.
You won't get that kind of honesty from most executives. Hey, it's going to be shitty for the next couple of quarters. Here's the problem with Tesla: shrinking margins, which are already shit. This is a company with like 4% operating margin.
Yeah.
Cash flows drying up. Revenue, this was their biggest revenue loss in, I think, several years. Right? Revenue is not even growing. And I get it. I know it's the humanoids and the AI and the robo-taxi that never came. It's all of that. This is a company with 4% operating margins that's not growing their top line with what's the price to earnings? Let's see. How ridiculous is the valuation? 167 185 price to earnings multiple, 4% operating margins. That's what this is now, today. So it's a tough one for me, but it's always been. I'm not going to sit here and act like a Tesla expert. If anything, don't take my advice. Tesla's always been a tough one for me to wrap my head around. I've missed this one for a long time.
Yeah.
So I don't know, but doesn't sound like something I want to run out and buy. Google, on the other hand, does. Been pounding the table on Google. It said Google didn't miss AI. This narrative about Google and the search headwinds is just ridiculous. You were able to get Google on the cheap back down around $140, $150 a share just a couple months ago. Now this thing's about to break out to new all-time highs.
Well,
Google, on the other hand, is a cash cow printing money, dominate. Search is fine. Their AI tools are pretty great. They're an industry leader, and you can get them for below market multiple.
Well, this is also a bit of a head scratcher, but in a different way, right? Because Google, so we're up 1.5% this morning, Alphabet, but so Google search has search revenue and search volume has increased this entire time for the whole 2 years that we've had AI in the way we've had a ChatGPT and all that.
And if
for the
you
whole
were just
2 years.
reading the headlines and listening to the pundits talk about it, you would think that business was falling apart for the past 2 years.
Right. So search revenue, search is part of the services segment. But search revenue was up to $54 billion last quarter. The services unit revenue was up 12%. That includes search, YouTube ads, and a bunch of other stuff. The cloud is going to always keep growing. How do they grow 30% a year every quarter like clockwork? And it's not just them, it's Amazon too. Kind of blows my mind.
These Mag 7s, they've been doing it for decades now.
I know it's 30%. It's 30% every quarter. Every quarter.
Why you have to buy these stocks every time they get cheap.
It's crazy. So they're talking about the threat of AI, but at the same time, I have to admit I don't understand how the search is someone smarter than me can explain how the search grows the way it has, because
so search, to be fair, I think search is more like low double-digit growth rate. The cloud business is growing like 33 or 32% year over year.
But how is search even growing at all? is my question.
So 12% on a $54 billion a quarter business is great.
Yeah, yes, it is. I don't understand how search can still grow. When like how many of us use Google more than we used to? Probably like not many, unless I guess maybe the AI. I mean, they have the Gemini in there, so maybe that's part of it. But I Google stuff now. Google is a verb, and I use it, and I Google things on Perplexity or ChatGPT. Right? It's like I don't ask Google questions; I ask AI questions in different platforms. But anyway, the stock is up this morning.
Yeah, go ahead.
It's like you said, it's a cash cow, and I don't quite understand it, but
let's put some numbers around it. This is like, it's hard to wrap your head around just what a powerhouse of a company, of a business that Google is,
because they're
almost $100 billion in net income annually, 400 billion sales a year. Is basically they're making $100 billion a quarter. The properties that they own and are generating these sales and net income numbers off of, think of the position that they're in. Google Search, the rest of the Google suite, right? The cloud stuff, YouTube TV. Who's going to take their business from them in the future? Spencer's right. 30% is ridiculous. That's going to keep happening. And 10%, 12% a quarter on a 50 billion a quarter search business, 200 billion revenue run rate business, growing at double digits every year, unstoppable.
Yeah.
So I love Google, the long-term outlook. Sundar Pichai says AI is positively impacting every part of our business. What more could you want?
Crazy.
75 to 85 billion in planned CapEx spend for 2025. And that is why you want to own NVIDIA too. Because these are their customers. The company that I just described, Google, this powerhouse, is the one paying NVIDIA tens of billions of dollars at a time. What do they call them? The super adopters? What do they call the big AI names? The mega adopters?
I don't know.
There's a word.
But yes, but like one of these years, the Super Bowl will be on YouTube, like just straight up on YouTube, right?
YouTube TV, by far the best of all the streaming apps. Nobody comes close.
All right. Hey, let's bring on Kenny real fast, and then we'll talk to Jeff Macke about what's going on with Google and American Eagle and Chipotle and all this stuff. But Kenny, are you here?
It's been a long time coming. They ain't come from my club, they took it. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
Okay, what I'm saying is it's just math, right? So if you look at a chart, right, and a stock's exploding, and you think, oh, I don't want to buy it now. I'm chasing. Yeah, you're chasing a little bit, but do you still think the stock is going to go to 5? If the answer is yes, then buying it at 320 you missed it at 260, does that mean it's not going to 5? No, it means it's going to 5. So you need to be in it. Now it's at 420. Sold to you. What's up?
Here we have Kenny Glick in his natural habitat.
Give me any stock that is mentioned by Nvidia, I'm loading up. You might as well say Tom Lee just bought this stock. It's the same thing. What is it? Who cares? Nvidia mentioned it. Buy it. Doesn't matter. And then if it gives you a dip and a chance to, oh, but I don't know. It's already up 80%. Look at this chart, people. Look. And this is one of the conversations I have had with my wife because she's got to deal with this face for the last 30 years. And I come out of the office. She's like, oh, look at that face. That's the face. You bought something. You said it was going to go to the moon, and then you sold it really quickly, and now it's going up without you? Oh, yeah. Well, why don't you buy it back? I just sold it. I don't want to buy it back. But you still think it's going to go higher, don't you? Yeah. Well, then buy it back. See? You need somebody that in your life. That's me. What are you doing? What are you doing? Look at this chart. What are you doing? By the way, you want to work for me? This is how I treat you. Because if you are going to sit here and not enjoy the greatest bull market that has ever happened, by far at this point, we are 20x what 1999. Forget about 1999. They're going to be telling stories about 2025. It's going to dwarf what happened in 1999. This is it. This is the greatest time to be a trader. This is it. Every stock, when they make the turn, goes 10x off the lows. Make sense of it. I don't need to. Stock was 50 cents. They got some news. Where's it going? 10x. Where's it now? 450. Ooh, you're going to debate about it? Ooh, I don't want to buy it here at 260, Kenny. It's up 30 cents. Are you a madman?
All right, guys, if you've never been in Kenny's room before, that's a nice little taste of what it's like. Pretty much every day, right? He yells at you to help make you money, right? That's what it takes.
I think we need a boot camp where we actually beat people, like with drill sergeants and billy clubs, and because that's what it takes. I mean, what are you risking here? Look at this chart. Look at it. Ooh, I don't want to buy the breakout. It's already up 38%, 40%. In this market, 40% is just getting started. Unbelievable.
Actually, very real message that I identify with in the chat from Christos. Kenny is pushing me to quit all my daytime obligations. I feel the same sentiment. I identify with this. Kenny will make you want to quit your job and just trade all day. It's dangerous. It's dangerous.
I need somebody to slap buttons when I tell them to slap the button. Unbelievable.
All right, Kenny, before we let you go, give us a stock here. What is this?
I got to be looking at Tesla because if you guys are bearish on Tesla, as the resident, I'm not as bearish the president anymore, but as the resident bear, let me explain Tesla for one more time. This is not a car company, never has been. This is a space exploration company that Elon Musk is going to be the first to get to Mars. They're going to be building domes. They're going to conjure up Arnold Schwarzenegger. They're going to re-release Total Recall 15 different times on the IMAX theaters. And you're going to, if you own Tesla, you're going to own an anchor of Mars, and you're going to be able to. Remember Otisburg from Superman 1 when they were going to blow up California and they were going to make new land? That's what it's going to be like. So there's going to be a Glickville, a Glickburg, Warlock Zone. That's what Tesla's all about. Space rockets, robots, AI, quantum, and chips. Tesla has it all. You want to sell Tesla? You're a madman. Tesla going 20x from here. Cathy Wood, baby.
You heard it here first. Tesla's a real estate play. Kenny Glick, hitthebid.com.
Exactly.
Yeah.
Because every share of Tesla you own, when they colonize Mars, you're going to get an option to buy land on Mars. And then eventually we're all going to go cryogenic. Tesla cryogenics, going to blast us off to Mars, and we're going to wake up in Mars, and we're going to have a party. It's going to be awesome. And then we'll be talking about Uranus. Not Uranus, but his anus. Uranus, everybody's anus. I'm out of here. Later.
Goodbye, Kenny. Jeez.
Well,
that was not an act in his room every day. It's fun, but it's an education, and the whole point of it is to make money, right? That's the whole point. And he gets mad when people say stupid things that fly in the face of making money, because that's the whole point of it. So if you want to get in there, 14 days risk-free, hitthebid.com, check it out, and I think you'll like what you see. If you are the kind of person that is at your desk throughout the morning, really from 8 to 10:30, 8 to 11, if you can be there, you should be there. That's the point. So thanks a lot, Kenny. Great as always. All right, let's talk to Mr. Macke. We have questions about American Eagle. We have questions about Chipotle. They also reported last night.
What'd they do?
I don't know. Let's find out. Let's ask Jeff. I honestly don't know. I mean, I know, but I don't remember. I have my notes somewhere.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
What up, Jeff?
Yeah, good morning, Spencer. God, I feel like, do I have to yell at people? How's that?
You can yell at me whenever you want. That's fine.
Oh, well, thank you.
I can take it. Yeah, I can take it. I know.
I felt like I was overreacting to Chipotle because, honest to God, the call was just offensively bad and
offensively bad.
Just like the numbers sucked, and that's one thing, but just the whole attitude, the kind of up with people. It's one thing to miss. It's another thing when you don't really seem to realize that you missed. And that's where Chipotle is. We had negative comps for the second quarter in a row, which was like for the first time we've ever had negative comps. But it's fine. It's fine. We're doing great. We feel like we're taking share, and it's like, well, an analyst, they're getting on the call they're not morons. You're taking share. Kava seems to have positive comps. A lot of these companies seem to have positive comps. No. Consumer strapped. We are victims of macroeconomics. And I'm thinking, there's other ways to play macroeconomics than a $10 burrito company. And so I'm just not that interested. And I'm kind of skeptical of the new management team. It was alternatively just kind of, I'd just like to thank the people for their great performance type of stuff, which as halftime speeches go, pretty bad. We're losing 28-0, and I'd just like to thank you guys for not quitting like in the second quarter when by all accounts you just should have walked off the field. It's just nuts. There was no accountability. It was bad. It was bad.
All right. So as we speak, Chipotle is down 12%, and that's what I was talking about with regards to Tesla. Like Elon Musk, when things are bad, he says that they suck. But Chipotle, I guess, even though you give it a D-, I guess they were saying not that bad. So does this go?
It was a gentleman's D-, just because I wanted to save an F just because who knows what Target's going to report. But honest to God, they should have flunked. They're kind of new. They've been there, but at this point, they've been there a year. The management team. Remember, Nico left. He went to go run Starbucks, and I was kind of crapping on Starbucks earlier this week. And then I hear what he left behind at Chipotle. And, once again, Brian must be a genius because Chipotle didn't seem to have any bench at all. It seems like, near as I can tell, he was running the place by himself based on what we've seen from present management. They're lost. They're lost, and I don't think they're getting found.
What did they say with besides blaming the economy and the consumer? Were there any reasons for the performance?
The economy,
the economy.
That was really your takeaway.
That's tough. That's a tough. That's a tough sell.
Brutal. It's brutal. It's because they're not it's not a ski slope. Like, you can't really come on there and just say, it was 75 degrees. That would be a valid excuse if you ran a ski company. But, they're selling burritos. You got to meet the customer where they are. And they're just kind of saying, we're going to continue to serve abundant dishes, and we're really more affordable than people think, then convince folks that you're affordable. For God's sake, be a little proactive. They're just kind of relying on the economy to come back. They actually use the expression perfect storm, which, is like a red flag stuck into a siren that's blaring in terms of warnings, because it wasn't a perfect storm. We had a lot of things that went right, a lot of things that went wrong, but the defining characteristic of the last 5 months, whatever, count it back to Liberation Day, has been that things have turned out a little better than expected. Not a disaster, not so horrible, but it's these guys again. It sounds like the Great Depression at Chipotle and pretty much nowhere else, which is weird.
Would this be bullish or bearish for Kava? Because different businesses, similar idea, different management. I would probably expect Kava to open down this morning, because these restaurant stocks can trade together. Stocks in any industry group can trade together. But are there no implications for Kava?
If there are, I would buy any restaurant that's down in sympathy, and I'd be real careful about that, because those stocks don't come with little labels that tell you why they're really down. But so there's a lot of other reasons that QSR chain can go down. But honestly, I would really want to be competing with Chipotle right now. I would go in, and if I were Kava, I would poach pretty much everyone who's smart at Chipotle and say, your stock options are underwater. They're going to stay that way. Your company doesn't even know what's wrong. Hey, want to come work for us? We actually have a stock that's going higher, and we have positive comps and positive traffic. It's what Chipotle did. Another thing, again, the call was nothing but red flags. I listened to it once at 1.2 speed while I was actually exercising. It pissed me off so much that I had to go back and listen to the prior quarter, just because I was kind of having deja vu, and it's like they said the same thing. We expect things to improve next quarter. These are the first negative comps we've had, meaning last quarter, and then they just posted horrible numbers, and kind of said, we expect things to get better. And I mean, analysts are generally pretty polite on these calls, especially with a company like Chipotle that frankly has earned a lot of institutional respect. But they didn't use the term bullshit, but I did, several times, because I just found myself uttering it out loud, like I had Tourette's or something. I couldn't help myself. I felt like Kenny. I was pulling a Kenny while I was riding my bike listening to the Chipotle call.
You and I were talking yesterday about, or maybe it was the day before, I don't know, about companies that had great runs. Like Lulu had a great run. Guess had a great run. And in retail, everything is kind of cyclical, and things have their moment in the sun, and then they don't anymore. Chipotle has had a great, actually several great runs. If you go and zoom out far enough, it had a great run from post financial crisis till 2015, and then again post COVID to last year. So a couple great runs, but is Chipotle's moment in the sun over?
They've been declared dead before, primarily when they gave the nation E. coli for a while there. That was
2015, right?
Yeah, that was a tough run. I was long calls in Chipotle when they actually had rats falling out of the ceiling the same day that earnings came out. That's a real thing that can be Googled. That actually happened. I still think it was a conspiracy. So, the timing was off a little bit, but they went on just a screamer for a few years after that. But what we got to with Chipotle at this point is they're doing yet another red flag action, which is they're opening stores faster to kind of cover up the lack of growth. And so their revenues were not negative, but their comps were terrible. And that's just because they keep dumping stores out there. And honestly, one of their solutions for what's going on here was to open more units. There's 3,800 odd Chipotles in the country. I think everyone can find their Chipotle. I don't think that's what the problem is. I don't see a lot of people that are just dying for a $9 burrito driving around their neighborhood saying, my God, where could we find one of these exotic Chipotle places? So we are reaching a little bit of a level of maturity. The initiatives they have don't work. And so as a general
Are you
rule,
saying queso was not the answer?
Yeah, it might be part of an answer. It might,
Okay.
but that was kind of the nature of it. Don't worry about it. We've got a double ranch dip coming out, and we feel really good that that's going to pick up those comps and the foot traffic and everything else. So they raised prices. That didn't help. They opened new units that covered up the lack of growth, but their comps were terrible. They love all their people who they're paying more and more to be less and less productive. I'm all in favor of paying people. I'm also in favor of not having pep rallies for them when your quarter sucks after you pay them a bunch more money. It's like, hey guys, we were kind of hoping for a little more effort there with the cash. The two are connected, and so I'm not sure what's going on there, but it's a problem. And in terms of like buying the dip, I would expect this to get worse throughout the day. I kind of thought the analysts were a little more polite than I expected them to be in the call, but it's this is a huge quarter for them. I mean, they got to come up big. They got to come up with some ideas. They blamed Easter. Now Easter is by tradition the first full moon after the spring solstice. So blame the druids. That's like we're dependent on moon cycles for making our quarters, because that's a problem. Again, I can bet on that other ways. I can bet on, hey, when's Easter? You got an over under. I can run like a lotto system. I can make money in other ways rather than just being long or short Chipotle depending on when Easter starts.
That's great. That's a great line about the blame the holiday. Because it fell earlier in the quarter or later in the quarter.
It was apparently a late. It was actually kind of a mid, but apparently what happens is that Easter launches burrito season. And once you launch burrito season, then you get to summer, but summer's not burrito season. So they had to use some extra promotions. Blah, blah, blah. They said June was great, and they've seen some strength in July, and then they guided to flat comps again. And, so there's not a lot of there other than just the reputation and the fact that, they still make decent food. People kind of like them, but no one's going there anymore. And analysts are just flat out calling bullshit on it. They said, oh, it's the weak consumer. And the Goldman Sachs analyst, who gets the big Goldman Sachs money for a reason, said, you actually have no real correlation historically with the consumer confidence levels at all. And that's been one of the great things about your company is you're not cheap, but it's just not a relationship that exists. Well, it does now. It does now. We've noticed that since February, and so we are fortune's fool, and just bite your knuckle and weep a little bit for just how little control they have over their destiny.
All right, Jeff, let's talk about the stock of the day. Yesterday, you recorded a video for your members, and you talked about American Eagle being at a critical area, $10. That was the level. And then a funny thing happened.
A funny thing happened. A funny thing happened actually much earlier in the day. They announced that Sydney Sweeney, she's an attractive younger person. It's a star of stage and screen, and they ran ads that were just tremendous. Now, a couple things, they announced this and it was out there all day and no one really noticed it. And then late in the day, someone on a chat room apparently said, "Holy crap, have you seen the Sydney Sweeney ads?" And honestly, they're nice. They're good ads. But they also ran some of the kind of the best TV commercials I've ever seen out of American Eagle. I mean, really compelling, just kind of striking. And I don't mean that in a salacious, filthy, pervy old man way. I just mean like a good ad is a good ad. And this honestly was like just firing a shot over the bow of athleisure because it made denim look cool. You and I talked about Levi's. No one really wanted to talk about Levi's. They're seeing a denim recovery. Sydney kind of just exploded that because no one looks better. She changed the entire definition of mom jeans as far as I'm concerned and made it something far more lewd.
Right,
I would encourage people to YouTube
bottom line
it
here is American Eagle. is this a squeeze / meme thing, or is this real?
They're trying to turn it into a.
It's not even better.
Here's the thing. The company, you asked me if I was bullish. The chart it reached $10. What is that? 2004? Actually, in 1998, 99, it was the same levels it is now for the first time. So you're talking about a pretty long run there of just flat and dead money. Some decent spikes. It's kind of the ne'er-do-well cousin of Abercrombie and Fitch. They never really get it together quite as well. But what they are is the fourth largest seller of denim in the United States, which is not nothing. They do about $5 billion of denim every year, which is about 50% of their sales. And so it is absolutely a thing to have kind of to enter the cultural zeitgeist, to have people talking about these ads, paying attention to them. And I tell you what, they're going to sell far more jeans than they otherwise would without this campaign. So is that worth $400 million? If so, then Sydney, I don't know the details on her contract, but she was wildly underpaid for the effort because it's probably not worth 400 million. But this is a company that very much needed a shot in the arm. The product doesn't really drop until after the quarter ends, and so it doesn't have to be in these numbers. So it did a couple things that are actually genuinely bullish for the stock. One, their denim is going to comp positive to the extent that American Eagle can actually stay in stock on the denim product that they're going to sell. It's going to move. This is the way things move in sort of teen and young person retail land. You know, they're a part of the conversation now. So that's great. That's bullish. And it also takes out the pressure on second quarter numbers, which I think are going to be pretty bad. But you know, it's, if you can say, hey, unlike Chipotle, which is saying, you know, things got better after we posted these terrible numbers, American Eagle will actually be able to say that with some plausibility. And so the company is genuinely worth more because of this. They're back half of their year. Again, the reason that I wasn't crazy about it at 10, even though that's been support for 26 years. You know, we said that this company is either going to 5 or the stock could easily go to 15. It's 11 times earnings. Earnings are going lower, generally speaking. They mismanaged inventory and comps weren't great. Comps will be really good in the back half, at least in denim, which is 50% of their business. They're heavily reliant on it. And Sydney Sweeney, it was just a really well cast, beautifully shot, tremendous ad.
Well, you talk about it going from 10 to 15. Halfway there.
I mean, that's nothing for this stock. You know,
halfway there this morning. So
it's you know, it's hard to value because again, they didn't really have any prospects before. There was no reason to think that they would capture any attention. It's just the most tired kind of company in the mall. They went from that to actually mattering. Now it's worth noting that Sydney's done ads for jean companies before. She had ads for Guess. You know, it's not like no one's seen Sydney Sweeney, but you know, the ads were just kind of, you know a good ad when you see it. I was a film studies minor, a degree that I don't get to use very often, so I like to drop it every once in a while. You know something visually compelling when you see it, something that's going to capture the imagination, and that's what happened after hours. They started running the actual kind of television portion of this ad campaign, and it struck a chord. It was hey, you know, stop what you're doing and let's check this out.
Question in the chat: could we get Jeff's opinion on the Gap? Okay, Jeff, we'll ask you about the Gap, but don't give away the farm here because I do want to save some of the stuff for the members of the Retail Roundup.
Yeah, you know, not crazy about recent performance. I'm not sure the quarter is looking tremendous for them, but I also am not entirely worried. Gap, in sharp contrast to American Eagle, actually is pretty well managed. They're doing the best they can with what they've got, and I expect that they're not going to have Chipotle's problems with the general mood of the country being entirely how they make their decision about buying clothing. We've talked about it a lot, Spencer. If a company's executing well, if they have what the people want, there is money out there to be spent. It just doesn't go real deep. And so you need a tailwind of some sort. Chipotle doesn't have one. That's why you're seeing the negative comps. American Eagle didn't have one until right around 3 o'clock yesterday, at which point, boy, that was certainly a catalyst for a lot of behaviors out there in the street, not least of which was driving the stock higher than it should be today. But it's undeniably a really good thing for American Eagle to be discussed in any remotely positive way other than just me teasing them for having such shit earnings and a terrible looking stock chart.
All right, so a couple of things, links that are in the chat. First off, Jeff wrote all about American Eagle late last night when this thing was popping off. That went out to his free list, the Macke Retail Report. You can sign up for free.
I wanted to share with the world, Spencer. It was that good.
Yeah.
Everyone deserved to see it.
If you want to see what stocks Jeff actually owns, you can see what's in his portfolio. You can see what trades he's making, what stocks he's buying, what he's selling, and then he also does these special deep dive reports. If you want to get all of that, you have to join the Retail Roundup. That link is also in the chat. Jeff will be making coming out with the report in the coming weeks, kind of putting the lay of the land together as far as the holiday season and tariffs and who's going to win, who's going to lose. It's complicated, but Jeff has the answers. So join the Retail Roundup with Jeff. Both those links are in the chat. Mr. Macke, a pleasure as always. Thank you for waking up early, even though I know you're up already.
Been up for hours, Spencer. Come on, man. You know that.
Yeah, hop aboard the Peloton. I'll see you on the Peloton. All right.
I'm gonna have a ride. I'll be relaxed. And a little meeting for the members later today.
All right. See you, Jeff.
Talk.
All right, it is 9:27. Where are we at? I know we're gonna have Sean on in a second. Anything cool happening this morning besides what we just talked about? What is MXL Max Linear up almost 30% today? What is that about?
I meant to hop on and ask Jeff about Kohl's.
Oh, about the mall. Shit, I should have asked him about the mall.
I know about Kohl's. So that Kohl's, that was just a buyout rumor that clearly was not true. The stock's down like 40% from its highs.
Kohl's opened at the high yesterday, right? And then just straight down.
You know what? Big box store has been absolutely crushing it, at least in terms of stock performance. Dollar Tree. That tactical base went. We were talking about this one in Dollar General, those little bases, beautiful memory gaps. The memory gaps are filled now. Dollar Tree's run, it's a double off of the lows from just a couple months ago.
Mm-hmm. Yep, Dollar Tree's been great. I bought it a month or so ago after talking to Jeff. So it's been good, no doubt. Max Linear is earnings. That's why that's up 30%. What else jumps out to me this morning? Dow Chemical down 10%. That's a big mover for Dow. IBM down 7% on their report. American Airlines down 7%.
Materials. You're seeing a sympathy sell-off across the space this morning. Yeah. I think because of Dow. Yeah.
Watch those meme stocks. Krispy Kreme straight down yesterday off the open. So, you know.
Basil's down 6%. Did they have earnings?
What is?
LYB?
Yes. I don't even know what that's an industrial. I don't know what that is.
Materials. This Molina Healthcare, I mean, how low can you go?
8% this morning.
You can't, you still just can't touch this whole space. Criminal and civil requests now coming from the Department of Justice for UNH. Just stay away from the plan providers, the healthcare providers.
No, you know who you can't touch is automakers. You got Stellantis down this morning. You cannot touch these guys, any of them. If they make cars, don't touch it. That's what you do. Maybe Toyota is the exception to that, right?
GM looks pretty interesting. So they slammed it on earnings.
Yesterday.
Down 8%. And I don't know what happened yesterday. Up 8.5%. Got pretty much all of it back. And looks like it's about to break out here.
Oh God! You're asking for it there. You're asking for trouble. Look at Ford. Look at Stellantis. Disaster. No, you can have GM all to yourself.
Okay, market just opened. I'm watching these bull flags and things like the biotechs, like we talked about. Is that one going to go? I think XBI is about to go. Confirm what we saw from IBB yesterday. KRE is another one. The regional banks, they're going to keep coming out with more and more, bank sector earnings over the course of the coming days and weeks. Are these flags in KRE and KBE going to resolve higher or lower? That's a big question for me right now. And then the home builders too. We had a really nice pop the other day, gave some back, some of them yesterday. Do we get a little downside follow through here today, or are we going? Let's go, home builders. So selling off here a little bit this morning. Just a couple things that I'm watching here today. And then Bitcoin, that flag in Bitcoin, same thing as those other flags. Is that flag in Bitcoin going to go? Because some of these miners, the BTDR, I mean, what a chart. Applied Digital, APLD, that one's really interesting too. So, in fact, we're about to go put some trades on.
Shout out to Tractor Supply Company, new all-time highs on their report this morning. Let's bring on Sean.
Yep. And ServiceNow beat. ServiceNow, nice beat, really nice reaction, gapping higher here this morning. This is one of the really, really exciting large cap software stocks.
Let's see what Sean's up to.
Yeah.
Or not.
It's a bull market.
It's a bull market, you know.
What are we buying? Or
Everything.
hedging?
I was trying to buy bull this morning, right where the market opened, but then you guys brought me on, so I can't buy it right now.
Trying to buy what?
A Weeble.
Oh,
Bull.
Weeble. Yeah.
Yeah. Might run without me here. We'll see. Anyway, hey, here's what I wanted to talk about real quick. And if Strazza's available, he should come in because I'd love to hear what he's doing. JC talks about all the time about how the S&P 500 is the greatest trend following system ever devised. And I agree 100%. And Strazza, you are probably feeling this a little bit in this market where friggin' everything is working and there are more ideas than we could possibly trade.
Yeah.
I'm finding myself at my risk limits. Like I don't want to take more risk than I already have on, but there's new ideas every single day that I want to trade. So I'm finding myself just rotating out of my poorest performing positions and adding new ones that I'm doing it over and over and over every day now. I feel like I'm like a mini S&P 500, right? I'm kicking out my worst performers, buying the ones that are
proud
moving.
of you. Proud of you.
And just doing it, but like in an accelerated way.
I was showing some of the guys on the analyst team just how many positions I currently have on. And the minutes that were going by as I was scrolling, it does, Sean, it gets absolutely ridiculous. And I've been dealing with something similar for the past few weeks, and I talk about it with members. I try to hold myself to, like, if I'm at a point here where I don't want more long exposure, like I'll tell you, I'm buying like puts now and then, trying to hedge some sort of downside just because I'm so long they continue to not work, right? But I'm doing stuff like that. When I buy new things, I'm taking profits in other things. Yeah. Sometimes losers, like you said, but a lot of winners these days too, right? We're just feeding the ducks, then I'm redeploying capital instead of just, plowing new capital into the market every day. I feel like I'm like you, I'm good for now.
I feel you on the positions. I just counted out my positions as you were talking. I have 64 open positions right now. It's crazy. It's crazy.
In bull markets, if you're doing it right, you're building a little baby index of all the names. And then at the end of the bull market, you got a lot of work to do, getting rid of all these things. But we're not there yet. I do feel we're extended, Sean. I was talking about it just earlier this morning. I don't love a lot of stuff right now for new money, for new entries. Like a lot of things are just super extended. Do you want to step in and buy all these overbought readings? I don't know. I would love a week or two, a little dip, a little corrective wave. Give me a coil, give me some sort of continuation pattern. Things like KRE, Bitcoin, the biotechs right now, these little coils, you could play stuff like that. But if you look at something like metals and mining, XME, highest overbought reading in God knows how long. You can't buy charts that look like that.
Yeah, you gotta, I think right now you gotta be really picky about the setups. They've got to be a clean setup, a clean, fresh break. I mean, buying the extended things now, that worked a month ago, but doing it now, I don't know, man. Yeah, I'm with you. I'm with you.
Yep, it depends what it is. You got to pick your spots. Don't chase the hottest stocks. Don't chase the thing that's up 100%, over the trailing month. Let them dance. To expand though.
I was listening to Kenny rant this morning, and when he was talking about how this is the greatest trading environment of his career. That reminds me, last week, our mutual friend, Brian Lund, gave me a call one night because he was concerned, not concerned, but he was like, Sean, you've been around since the late 90s. You traded in the late 90s. I'm calling everybody I know who traded in the late 90s. And he wanted to know, are we seeing it again? Is this a repeat of the .com bubble? Yeah. And he's like, are we early in this thing? And I was like, I didn't have an answer. I'm like, I don't know, but we're starting to see the signs. And if this is some kind of echo or repeat of the .com bubble, then in that case, we still got a long way to go, boys. We got a long way to go. We're just getting started. There's not enough names participating yet because neither of you were around in the late 90s, but there were hundreds of stocks that were moving 20, 40, 50 points intraday every day. There were IPOs every day. We're not there yet, but this could be the beginning of it. I don't know.
I'm not a big fan of analogs, but I do really like the mid-90s comparison. And it makes a lot of sense in a couple of really important ways. First and foremost, more important than anything, is we are going through a technological revolution, right? Like, I'm a big believer. I'm a buyer of that AI is changing the world thing. Gross margins are going to expand across the board. The growth rates of these companies are going to surge. multiples should expand, right? So that means you should get a prolonged bull market period to price in all of that good stuff.
Right.
I and big guy who melts up a lot more from here. I subscribe to that.
Yeah, your mic's having a little issue there, Strazza.
Yeah,
So
we're having a mic thing.
yeah, let me fill in the blanks there. I see Coffee Dodgy in the comments said not that many AI names relative, and I hear you, man. This is actually one thing Brian and I talked about. We're like, back in the .com bubble, there were hundreds of .com type names that were just ripping. We have some AI names now, but it's only what 10. Right. So we need more. We need more IPOs. We need more companies coming to market. And maybe we'll start seeing that. And if we start seeing that, then it's like the game is on, boys. The game is on.
Or if you're uncomfortable trying to pick, whatever company is going to build the next cool tech product or service, just buy Google or NVIDIA. Buy the current AI names. Spencer was, talking about this morning. The fundamentals of these companies are incredible, getting better, and some of them are pretty cheap.
But is that where the alpha is going to be? I mean, we need stocks that are going to go from 5 to 100.
Yes, I think so, because we are in capital markets are in a very different place now. I don't think we're going to see a wave of IPOs like you're talking about, Sean. The reality is most companies have very little incentive to go public anymore. So
I don't like this. The BlackRock guys are doing the rounds talking about how the best opportunities of the future are going to be in private markets, and everybody has to buy these private market funds. These shysters, man.
They're saying that because they are selling private market products. I'm saying that because the data is showing that fewer and fewer companies are going public every single year, right?
Yeah.
And more companies, when they do go public, are going public at higher valuations and later, more mature stages.
Well, maybe the new IPO of the late 2020s, that's going to fuel the doubling of the NASDAQ. It's not going to be IPOs. It's going to be everybody doing the SPAC backdoor. That's going to be it. That's how everybody gets involved.
Okay.
I also
bring it back.
There was an onslaught of new public offerings, right? And IPOs in 2020 and 2021. Go look at some of those names.
There was
plenty of new growthy tech speculative companies that are saying they're doing AI. Some might actually do AI in that basket of IPOs from the last.
If we actually got another SPAC boom, we just came out of one a couple years ago. If we actually got another one so quickly, honestly, that would shock me.
You're going to, because frankly, it worked. All of the shit we talked about the SPAC stuff.
It worked for who is the question.
I don't understand what's so funny about
it. Worked for who? It worked for
some of these companies today. It's an easy way to go public. They're going to keep doing it. There's no reason not.
Hey, someone in chat said, yes, we are in February of 1998. Look, if you believe that, and I'm not disagreeing, I'm not agreeing or disagreeing, but if you believe that we are in February of 1998 doing that 90s analog, then the NASDAQ doubles from here.
And that means that soon we're going to be partying like it's 1999.
Woo! Yeah, we're going to have to get a whole new suite of bull market shirts, a whole new look.
I have ideas. I have a lot of ideas for new bull market shirts.
I hope you bring some new ones to Toronto next month.
I didn't like the shirts they had at the last one.
We have to order more. Yeah. Okay.
Hey guys, hold on.
Yeah.
I'm annoyed. You gotta hear. I got a story.
All right.
I'm glad Sean's here for this. So I need new headshots. Like somebody needs to come take a picture of my face. It's awkward for me. I'm not good at it. I want a professional, right? Rose can't do it.
Yeah.
I called some people. I reached out to some people yesterday. Some lady calls me back. She's asking me, what do you do? What do you need this for? That was my first mistake. I should have said, shut up. What's your rate? So I'm telling her. So she's looking on the website, checking the Twitter. And I'm like, yeah, I need, I'm going to wear a jacket and maybe a fun shirt and then a button down shirt. And I'm going to do different faces. It's headshots, Okay, $500. We'll do an hour sessions, $500. I'm like, what? That's high, I'm thinking. And then $250 per photo.
Oh,
what?
I said, what do you mean? Yeah, the photos. You pick out the ones you want. 250. So I'm like, so this is going to be thousands of. I said, lady, I'm laughing. I have her on mute. I'm laughing. I'm like, Rose, did you hear this? You're more expensive than a lawyer. I don't understand. I'm not going to say it's unskilled labor, but I don't think you have to go to school or get a degree to take photos.
Strazza, It'd be cheaper for you to book a plane ticket, come visit me in Colorado. My
Listen.
wife will do your headshots. She's great.
So listen though, it gets better. So I say to her, that's kind of high. She's like, wants me to like book an appointment. I'm an honest person. So I'm like, no, that's really high. You know what she says to me? She goes, what are you talking about? That's high. You're a Wall Street person. You're out here talking about trillion-dollar companies. So first of all, lady, that's a cryptocurrency. It's not a company.
You know what?
That is rate discrimination. I don't know what they call it, but it's a bad luck.
You know, when you told me that she was looking at your
accountants might do it fine.
You know what? She shot her shot. I can respect. She shot her shot. I can respect it.
If I was like a plumber with my own business from the town here and needed headshots, that wouldn't be my rate. So that's shame.
When you told me that she was looking at your online profile, I knew that's where that was going. I'm like, oh, she's gonna see this guy's a trader.
She shot her shot.
Talking about trillion-dollar companies, she said. I was, oh, okay, that's what's going on here. So if anybody's in the Fort Myers or Naples area and wants to take some headshots of a handsome man, slide into my DMs.
the timeless art of seduction. Yes.
All right. All right,
lady. That's terrible.
That's
really
funny.
awful.
Yeah.
So that's what's annoying me this morning.
I guess
she overplayed her hand, is what she did.
What are you talking about? I pinged Izzy too. I should have told her, like, I have people I can check this with.
Yeah.
Before I get ripped off.
Yeah.
Izzy's like, no way.
$500 and then $250 per photo. That's
$500 for an hour.
That's great.
Like,
oh God,
that's a high rate.
That is high. $250 per photo is ridiculous.
Yeah, she was working you, buddy. She was working.
All right. Anyway, all right. Let's get out of here.
She's watching the show this morning.
If you are a member of the Breakout Multiplier, you'll get your weekly video with Strazza at 11 o'clock today.
Can't wait.
Kenny's going live at noon. Sean is doing the jam session at 3. Crypto stream this afternoon. The Gold Rush stream this afternoon. A lot going on today on the channel. Free and for members. Check it all out. StockMarketTV.com. Thank you, Jeff, Sean, and Kenny. Like I said at the top of the show, we'll be off tomorrow. We'll be back, full crew, ready to roll Monday morning. Everyone have a great weekend. Go make some money. Go trade. Go cut some grass. And all right.
I need to cut the grass. Thanks for the reminder.
Always.
I can't take no loss. I don't even know what it costs. I hit the ground, then I go